what should be your investment strategy to get the maximum benefit from this bear market. The big question today is that, is this bear market a signs of a longer recession in the market? So if we look at what has happened in the last 1 week, so we've seen that the US Fed has just increase of 75 bips suddenly. The reason that was the inflation numbers came north of 8%. Their GDP has contracted in the last quarter, but their employment numbers actually have been steadily coming down. So the Fed has found itself in a very unique situation where even though the GDP is decreasing, the inflation is not in control and employment rates are rising. So their biggest priority now is to control inflation. We've seen the Fed chairman going all out and trying to control inflation. He's made it very clear in his speech or on his press conference that they are going to look at a correction north of 50 bips, most likely 75 bips in the next meeting as well, probably in July and September, and see where the market goes from there. Unfortunately, Fed has been lagging in its rate corrections. The market has corrected for the last 7 months, but the Fed has only done corrections of 25 bips, and inflation has not been in control. So it's been more, rather than being front-ending the the interest rate hikes, they've actually been behind the inflation and trying to correct it now. There are other uncertainties in the market as well. The Russia-Ukraine war and the Chinese corona situation has got worse, and China has gone into lockdown. So the big question now rises is this correction a start of a bear market, and what should we be doing in this scenario or in this bear market? So one thing to see is what has been the bear markets before and how long have they lasted and what has followed after these bear markets. So these bear markets or these big corrections in the economy and in the stock markets are actually a very good investment opportunities for long-term investors. So if you see, there's no certainty that a correction will be followed by a bear market, because there have been 24% corrections in the US market, and only 5 of them have been followed by a bear market. So 80s, 87, 2000 and 2007, 2020 have been followed by bear markets. So if you actually look at what has happened in the US, so very clearly if you see that the last correction only lasted for 33 days, right? So the COVID correction which happened, it happened of approximately around 35%. The markets corrected by 35% and it only lasted 33 days. And we saw a bull run which lasted for more than 638 days and gave a return of 113%. If you look back to 2007, so you will see a market correction of 57%, and the bear markets lasted for 517 days. And then we saw a very big bull run which lasted for 399 days, and the market gave a return of 401%. Now if we go back to the dot-com bubble in 2000, there the market corrected by 49% and it lasted for 929 days. Post that, we got a bull market which lasted for 1800 days and gave a return of 102%. Now if you go back before that to 1987, the market fell down by 34% and the bear market lasted for 101 days, and post that we saw a bull market which gave a return of 582% and it lasted for 4,494 days. So generally a bear market gives a correction of close to 40%, has been 34 to 57% ranging, and has been only for a duration of close to 18 months to 2 years. But post that, we've seen big bull runs which have given almost like 5 times or 4 times the return and have lasted for more than 8 years. So it is very important that you take this investment opportunity very seriously, because you will not get a better investment opportunity than this bear market. Now, what should be your investment strategy to take maximum benefit from this bear market, right? So what we have to look at is that a bear market will last for 18 to 24 months, and we are already 6 months into this bear market, and we've seen a decent enough correction of 24%. We might see another 15-20% correction, but going forward. But if you look at doing bottom fishing, or you wait for the markets to go down completely and then invest, you might, for some people that timing works, but I don't think so. That is the right approach of looking at a right investment strategy, because the average market return gives you 210% on average, and a bear market has given you a negative return of 38%. But a very important thing to note in that is days where the market has corrected upward, or the biggest upward gains in the market, which are very difficult to time, and you're trying to time that. If you miss those opportunities, your returns come down significantly, come down quite drastically in fact. So काफ़ी कम हो जाएंगे आपके मार्केट अगर आप टाइम करने की कोशिश करोगे और आप अपने टॉप 10 days of market gain को आप मिस कर दोगे. So if you miss those days, then your gains will actually come down, or will come down by close to 30 to 40%. So it is more important that you spend more time in the market, and when these opportunities to invest come, you actually keep on doing a strata-wise or a buy on dip strategy, or you follow a buy on dip strategy in a bear market. So the best way to do it, if you cannot, you cannot wait, or you don't have the time, or you cannot see when the corrections are going to happen or what the correction is going to be, the best way is to put your money into a liquid fund for say a year or to 18 months, and keep on investing on a monthly basis or a quarterly basis into the stock markets, be it large caps or be it mid caps. Both are going to give you very good opportunities to invest in India. It is a better opportunity to invest in the US markets because they have corrected more than the Indian markets right now. So I will suggest that you look at investing in the US markets as well, either through funds, direct stocks. You can look at investing into some top liquid funds of the same fund houses, and do a STP, into equity-based funds, be it large caps or mid caps or small caps. So you can, if you're looking at investing into a small cap, say of SBI or a SBI small cap, then you should ideally put your money into a SBI liquid fund and do a systematic transfer plan on a monthly basis and transfer your funds from the liquid fund to the equity fund. Similarly, you can do a similar strategy in other fund houses as well. Look at investing close to 60% into a large cap fund, and the 40% you can divide ideally into mid caps and small caps. Both of them have corrected quite well this time, and you can look at putting 20% into a mid cap and 20% into a small cap. Apart from this, if you are a risk-taking investor and you want to take exposure to cryptos as well, they've corrected quite a bit. So you've seen Bitcoins come down to almost 20,000 levels from 69,000 US dollars. Similarly, we've seen a correction in Ethereum as well, and you can look at investing into these two coins. The reason why I'm telling you to invest into these, because these are the top two ones. The people have more faith in them. So you will not see what you've seen in some of the stable coins and some of these cryptos, some other cryptos which actually have got wiped out completely. So if you are looking at investing into Bitcoin, then look at these two options. And if you want to check out our videos which small caps and mid caps you should be investing into right now, you can let us know, and I'll make a next video as to which equity funds you should be investing into in 2022 to take maximum advantage of this bear market. Please use this opportunity to invest into the market, because last bull run lasted for close to 12 years. We've seen from 2007 to 2020, it was a good time to invest. And even the post-COVID, we saw a very good return from the market. So these bear markets ideally give you a very good opportunity, especially if you're looking for returns for the long term. And I'll see you in my next video. Thank you. And don't forget to subscribe and like our video if you like the content.